So hi everyone, this is Sameer Singh Jaini here. I'm sure many of you are right now just joining in. We are going to talk about a critical subject. I think GST, we have been using it for 5 years. It's not net new. And of course, with time, it has been evolving a lot. In today's session, we will try to focus a lot on the framework, how it can be used for lending perspective, and also maybe a bit of an idea about what it is, right? काफी लोगों को पता नहीं होगा कि exactly वो क्या है, कैसे चलता है, how things progress, right? So idea is to give you a view on it, how it progresses, and also talk about the use cases. So the way we will do this session is I'll obviously first maybe 5 to 10 minutes we'll do introduction discussions on that. Then we'll have pointed questions for another say around 35-40 minutes, 35 minutes I guess. And then you guys can keep asking me questions, and I will replay them back and ask our esteemed partners here who are actually guiding us, because I'm not an expert on GST. I'm also going to learn. I think nobody better than them here. So we have Mr. Neeraj who will guide us as somebody who's implemented GST on his side, and also Rushikesh will help, because from a OKEN perspective, Credol perspective, they are leading the change in the market with Saha and other initiatives, right? So I think we'll understand from both sides. So with this, we quickly start and sort of take you through the thought process. Maybe a quick introduction. My name is Sameer Singh Jaini, and I'm part of the Digital 50. And as I said, the focus is to figure out how GST data can be used for MSME lending. And one of the intent, and as I said in one of the thing that I think I would like to see, if when my obituary is written, that we would have said something like the rate could be brought by us, all of us together, from 24% down to say like 12%, which is what salaried class gets, but MSMEs don't get. Even I don't get loan easily from any bank. That's a fact of the matter, right? Quick point, who we are. The Digital 50 is primarily focused on fintech, and we are only in fintech business. When I say fintech, digital for BFSI, which is banks, also is fintech, and we work along with them across board. And we work in consulting, partnership, training, and recruitment, all of these sites, but only on fintech sites. But that's again not the agenda. Let's quickly move to the subject itself. So I think GST from a framework perspective, I have been using, right, as a MSME, I have been sort of inputting my data. A lot of data power is there, to whom I have given services. By actually, if you correlate that and you look at my account statement, actually the delay in payment as well. So you don't need to go and look at my accounting system. You actually can know delays. You know how much the counterparties, what kind of counterparties are there, what is the quality of counterparties. So there is a framework which already exists, but we have not seen it getting enriched and used largely in the market. I was talking to one of the leading banks, and they're saying we are right now doing an MVP for GST-based lending, right? 5 years down the line, we are just doing MVP. I think something is a knowledge issue, which I think we need to fill up that gap. Maybe this session is just a starter, but we would intend to do more. If some of you would like to talk to us and figure out what more we can do there, we would love to do that. And of course, this can help us in invoice discounting. This can help us in import rated transaction as well. Everywhere it can help. It can help in underwriting on the initial stages. It can also help in sort of surveillance, right? For example, early warning signal. We look at some random signal. This is a signal. If I'm not submitted on time, or if my GST invoices are coming down in size, all of that is really which can be used as well. So I think, as I said, I think we couldn't have had the sort of from a speaker perspective or person perspective, we couldn't have had somebody better than them. So Rushi, obviously, from a Credol perspective, he heads Credol, and Credol is leading the entire iSpirit initiative around lending, which is OKEN and Saha. And OKEN and Saha, what he sort of runs and manages, and of course many more things he will be managing as well. So we'll hear from him and the use cases, and also we'll hear it from Neeraj, who's from a framework perspective. I think Signet is actually building one of the best GST related focused platforms, and of course beyond that as well. So we'll hear from Neeraj as well. So thank you to both of you for your support. And if it is okay, we start now.
Yeah, I think yeah,
absolutely.
Thank you. I think then we focus shifts back to you. I think we spoke about this area, but maybe from Rushi, from your perspective, this very closely. So maybe can you give a quick brief on GST and other initiatives which can help us in the credit side, just a very high level before we get into a deeper.
So when you say like what exactly are you looking for me to answer? Like
more from a GST, how it can help in credit.
okay. So guys, overall, as you know, our mission is to get MSMEs credit. Like like that was mentioned earlier. This has been a largely very underserved segment, and the major problem of serving credit to this segment was the lack of high provenance data, right? So one of the biggest problem we tried to solve was that while you could argue KYC and credit models and all are a problem, but the base problem before you can start to solve for anything is data. So if I take you back to 2005 and 6 when the credit bureaus just went live, and you had NBFC started picking up the credit bureau data and started giving small retail loans, it was because of the availability of repayment data that this was possible. Now with with retail lending, it's simpler because you have annuity, salary income, and once you have that, what the exposure is. It's very easy relatively, and I'm not simplifying any credit assessor's job or underwriter's job, but it's relatively simpler than underwriting to an MSME, where MSMEs have various sources of revenue, right? It's necessary not just one paymaster. They are doing business with multiple people are paying, they're raising invoices on multiple people are paying them, some on time, some late, etc. So there were two major pillars other than credit data that needed to be made available from a high provenance source. And one was invoice data. And obviously the advent of GST and GST, moving from a tax collection platform to now an invoicing platform with the e-invoices, that actually formalized the ability to trust where the invoice was coming from, right? Because you're getting it in a standardized format, you're getting it from a high provenance source. And what it does is it gives you reliably the past history, because you wouldn't be filing a GST invoice and paying tax. Some would argue, yes, fraudulent people do that, but that's a very, very small percentage. Like by and large, you wouldn't be filing an invoice and paying tax if you weren't doing that business. So it becomes a very high provenance source of the potential turnover that a company has without actually looking at its balance sheet or P&L, right? The second signal that it also gives is, the second signal that we worked on is with the account aggregator and the bank statements. Previously, bank statements were, given offline, soft copy, stamped by the bank, but were obviously subject to fraud. Again, now you're getting them directly from the source. Now, I guess one thing you might hear from me, which you probably haven't heard before, is GST is soon going to be on account aggregator. So currently, you can access it via the GST Suvidha providers with consent from the borrower. But in the next few weeks, you will see that, we are on the path to having, just the technical implementation is underway, and we'll have GST on account aggregator as well. And this will put us in a great place where we can now, with a few clicks of a button, get consent and transfer both GST and bank statement data to a lender to start making an assessment. So that first major step where the data becomes available, and we can talk about how to use that data for credit underwriting, and maybe Neeraj will be a better place to do that than even I would. That is the first layer that we've created to be able to start using GST data. And I'll say one more thing before I'll hand over to Neeraj, is that we have started testing GST Sahay, right? So I know we've been hearing about GST Sahay coming for the last 2 years. Actually, today will be the first customers starting to being tested. We obviously do this manually face to face now. So hopefully in the next few months, you'll hear more about this scaling. But this invoice financing has actually, today is the first day that it's actually taken root. So it's actually a good day to be having this discussion. So over to you, Neeraj.
Yeah.
I think, thank you, Rishi. From a framework perspective, good to see it's progressing. I think wo mere Karan Arjun aayenge, right? Karan Arjun was account aggregator and OKEN. I think good to see the framework coming in fruition, and of course, it will make a serious impact to the market. I think everybody's been waiting for it. So congratulations, Rishi.
Right.
This is good. This is big news. So I think,
I mean, I would hold off on the congrats if we're successful, but
नहीं, I think वो मतलब चालू तो हुआ है. We'll figure out what next, right? But this is good, very good, very good. So Neeraj, from your perspective, I think I met a client few days back. I'm just actually last week, and we had this GST. They had the whole thoppi of GST in their front of them, saying they will take a GST document from the client, and then they ask, how do you assess? Actually, sir, I can't assess because it's too complicated. So we just look at some few data points and start. So I think important that I think Neeraj, you can guide on how people should be looking at that data, and maybe what are kind of different data points which exist in GST which people actually tend to ignore.
Yeah, I'll do that, and give me a little bit more time, so I'll try and elaborate it to the best I can do that. And maybe kind of I can share screen, so I can use couple of slides to kind of really help into the
Sure, sir.
session. So I'll do that. Is my screen visible?
Yes.
Okay. So kind of about 5 years back or 4 years back, I had made a comment in a public forum that with GST data, the times are going to change in India. So from an asset-based lending, we will shift to a business-based lending. And very honestly, that comment was ridiculed. Nobody in India was willing to believe it and kind of say that it's impossible. And back then, about 4 years back, we launched FAME, which was a credit assessment tool based on to the GST data. I think those people were to an extent right. I was a little bit maybe too ahead of the times. But today it is happening that that journey has literally taken up in a rocket, means like a kind of a very fast paced mechanism, and it's going very, very fast. So now what is the difference between the two, and how the GST data or how the current ecosystem or how the GST Sahay app has been actually kind of conceived, and how this entire process will help? So there are three, I would say first set of data is the GST data. When a person files his GST return, he kind of uploads all his outward B2B invoices. He uploads the summary of all his B2C invoices. He uploads the credit note. He uploads the kind of all that information. He then kind of takes the input tax credit, which is available to him through a 2A and 2B mechanism. These are the kind of reports available from the GSTN portal. So from this particular data, you can create a kind of a pseudo balance sheet of his business. And through his consent, a 5-year of such a data is available. So that is the first and most important, that today on a click of a button, I can do a comparison of 5-year of his sales data, his purchase data. I can know what is the cyclic nature of his business. I can know what has impacted his business, whether COVID has impacted, not impacted, what is the seasonal fluctuations in his business. All this information on a click of a button is available. Now you take the next step with it, the bank statements and the kind of automation that has been done onto that area. Now you analyze the bank statements and kind of incorporate that particular data into it. Maybe you will get a good input or an insight in terms of how good or how bad he is getting his collections, how well he is paying his suppliers. Multiple different insights are possible. And then you add the bureau score to it. Along with this three particular information, you have a kind of a model which is available and which you can kind of use in terms of your credit decisioning. Now this model can be converted into a complete score-based model. So it is very easy to kind of analyze multiple different taxpayers very quickly using this model. And the bigger advantage of it is that you only look at the kind of non-confirmatories or a kind of a score which is below than what you want, and whether you want to take that risk or you don't want to take that risk. So this literally eliminates going through and analyzing all the kind of my data points at a macro or a micro level. This is a major advantage into this. So from a organization standpoint, you can start with that. You get the credit analysis information, you can do the risk monitoring, and we have come up with a proprietary score which allows you to even kind of it's a very good indicator in terms of the risk monitoring of the people to whom you have lent. So this complete ecosystem helps you to kind of take the decisions much faster. Now, when we come onto the underwriting model inferences, there are data sources for that, are the raw GST data, raw ITR data, bank statement. Even you can include the ITR data into it, and you can do multiple different types of detailed.
Neeraj, you've gone on mute.
Better now?
Yeah.
Hello? Yeah. So from the underwriting model inferences, you can get a multiple types of inferences on terms of what type of risk you should take with him, what is his sales growth, what is his kind of EMI bounce rates, what is the type of kind of credit notes that he is using. So is he kind of over invoicing? Is he under invoicing? Is he doing some round tripping of the transactions? So many different kind of multiple information is available from this particular data. And there is no data available which would be so rich except you have the complete access to his accounting package. So this is the second best available data apart from his complete access to accounting package, which you can use to analyze his credit worthiness. And because of the availability of this data, lot of invoice financing will take place now into the market. Already it has started and much more it will go. The second point or the third point, which is very important for any kind of financier to do the invoice financing, is whether this invoice is genuine or not. And second point, whether the goods have been really shipped or not. And with the information available from the GSTN portal or the e-Invoicing portal, you can actually verify whether the invoice has been registered onto the e-Invoicing portal or not. So that gives one kind of a genuinity. The second point is you can take the e-waybill information of that particular invoice and you will know whether this invoice has actually been shipped or not. So this is a kind of a additional benefit you get out of this data. So the complete richness of this data, the analysis that is possible around it, the tools available for it, and the consent improvement that we have seen into the market of people wanting to kind of go this route has started going up exponentially. And now I think after the 5 years of this data, I really feel that this is going to take off in a big way. And the GST Sahay initiative is definitely going to help into this entire process. So I think as Rishi mentioned, there is some manual part into it, but I think all of those can be very easily automated and a lot of those areas will be done. So this is a kind of a quick background from my side on the quality of the data that is available, the potential around it, and the benefits around it. Back to you, Samir.
Thank you. I think the country needs, at least I need a masterclass on this from your side. I think this is super data, super inferences, right? Possible. So I think coming back from here, if Rishi, you can talk a bit more about Sahay and how, while it is about usage of GST and other pointers, but where is it in the market, what stage we are in, and how this same framework can be used in other use cases. So I think there's a lot of sort of a thought going in the market, but it'll be good for us to hear from you. How do you see it scaling and how others can put use case around that?
Yeah. So look, this is a question we get very often because, yes, as we build it out, we do it very quietly. And then, suddenly it just shows up and everyone asks, like, if you're not working on it, where did this come from? So what I'm happy to do is I'll take a few minutes just to explain how we look at rolling this out, right? So see, the first implementation we created was called the Government E-Marketplace Sahay. So it was for purchase order financing. for purchase orders issued of the GEM platform, which is the government e-marketplace where all government entities are supposed to be buying whatever procurement that they do undertake. Now, while that started, that was obviously like a closed system. You know, they have about 5 lakh active user, you know, like sellers on the platform. It's obviously not as vast as GST, which is, I think, I don't know, 12, 13 million people filing GST returns, right? Now, the next step was, so, you know, what we are trying to do is create reference use cases. So PO financing was the first one. The second one is going to be GST Sahay, which is invoice financing. Now, what this does is also includes using the account aggregator framework, which is the 3 pieces of data that even Neeraj mentioned. You have the GST data, which is a proxy of the turnover that someone does. You have the bank statement data. Does that turnover turn into cash? And are they making more cash than they are spending? And third is the repayment data, that if you've taken any loans, have you repaid them on time, or are you already under stress? Right? So those 3 pieces of data are used to underwrite and give loans. Now, look, for larger companies, like so non-sole proprietors, partnerships, private limited, and so on, when you're large enough, banks will approach you, do this all offline. The costs of doing that are not high. But for smaller ticket sizes, unless it's completely automated, like, you know, and we've always maintained, right, that you are not going to serve Bharat with manually. It will have to be via technology, because like manual costs don't justify you know, being able to serve or bring financial services to that particular cohort, which is why the country is doing so much to build out these digital infra, right? So what we are trying to do with GST Sahay is now build another reference use case to show people that it's possible. And we have early adopter banks. So in this case, you know, SIDBI, we've partnered with SIDBI, and SIDBI is, you know, taken the lead on building the app and will be the first lender. But a lot of lenders are very excited about this, including all the marquee names that you know in the market, large and small NBFCs, because while retail lending has been effectively captured, so obviously we are doing this from a public good perspective and trying to get credit to the underserved, but that also represents a great financial opportunity for a lot of, you know, lenders, because, you know, our estimation, and even IFC and World Bank estimates, put MSME lending as large as the retail market. It's just not been entered in and penetrated as much yet. And partly it was due to these infrastructure and acquisition issues, which now hopefully this public digital infra will solve. Now, what we've done is we've created another reference app where the user can consent, submit their GST, bank data, the lender pulls the credit data, uses this to create an offer, and then if they get the offer, the user does the KYC, so on, and goes on and gets the loan. And all this will happen in under 10 minutes with money in the account as well, right? So the idea is to make it possible for small ticket loans. Like, we are not so concerned that the ticket sizes should be huge. We care that the volume is high and that the smaller underserved guys get it. Now, see, one of the misconceptions that happens is when we talk so much about PO financing and invoice financing, we are not saying that Sahay has the monopoly on these use cases, right? What we are only trying to do is to prove what's possible. Now, the next step. So, you know, we have 6 lenders live on Sahay. We'll soon have another 6 in the next month and a half. So it'll be 12. And then, you know, the snowball has started. Like, the lenders now coming on board faster and faster. Now that fixes the supply side. So we have at least the product on the shelf, lenders getting comfortable with the tech, getting comfortable with the credit model. Now what we have to do is the distribution side, right? So we are not saying that Sahay should be the only, you know, lending app. Just like Beam should, you know, Beam was the first reference app, but it was not meant to be the only payment app, right? So what we will be doing in June, July is opening this up for other use cases. So there's nothing preventing someone just starting their own version of Sahay. Obviously, you wouldn't call it Sahay, but it could be an invoice financing app that a startup wants to start and start advertising and start getting users. It could be aggregate financing. It could be, a solar panels manufacturer doing this for his own ecosystem of vendors. But the data will be available for the assessment, right? So for whatever use case you can think of, what we've done is laid the foundations of the data, and we are not saying that we will drive all the innovation. So yes, if it took, excuse me, an MSME, say previously anywhere from 4 days to 2 weeks to get credit, we will make that quantum leap of crunching that down to 10 minutes and make that completely paperless and presenceless. But what new use cases is now we leave to the market, right? So, if you can think of new use cases that you want to enable on OKEN, please feel free to reach out. We'll happy to have the discussion. I'll even engage with the banks on your behalf for their use case to see if they'll finance it and put people together, because our job is to create what we call a Cambrian explosion of credit products. We don't want to limit it to 2 or 10 or 20. We're hoping that there'll be thousands in the next, over the next years once the infrastructure comes to life. And a simple submission, when UPI came about, everyone's like, okay, I can send money peer to peer and wow, this is cool. But who thought you could be able to subscribe to, IPOs using UPI? So those were innovations that came up after the initial use case. So all I'm saying is that we have laid the data framework and the protocols where you can standardize the process to give the loan. Now what we are saying is, tell us what use cases you think that we could enable to help drive the penetration of credit. So it would be unfair for me to almost be prescriptive about what those use cases are. In fact, I'm saying, we want the private market to come and tell us what they want us to enable on the platform so that we can drive credit penetration. Does that sort of make sense?
Oh, perfect. And maybe a lot of people are actually sending me continuous message saying, they're confused between what is OKEN and what is Sahay. So maybe quick 30 seconds.
Yeah. Okay. So very simply, UPI, everyone knows, is the unified payments interface. Bheem is the app that sits on top of it, as do Google Pay, Phone Pay, Bharat Pay, using UPI as the protocol to transfer money. OKEN is the protocol to enable the loan. Sahay is the first reference app like Bheem that sits on top of the OKEN protocols. Is that clear?
Makes sense. I think
so Sahay is the name of the app and OKEN is the protocol, right? So see, even today, like you see, nobody says I'll UPI you the money. They say main GPay karunga, and like GPay has become almost like generic. Even if it's Bharat Pay, Phone Pay, Paytm, they'll say, GPay kar deta hu. But okay, so that's just taken root. We don't know whether it'll be Sahay or OKEN or whatever that will take root eventually for this particular thing. But OKEN is the protocol. Sahay is the first reference app. I hope that's clear.
No, this is good. So this is great. I think Neeraj, as I said a few minutes back, that banks find it very difficult to figure out how to use it. So I think while we go into or more complex cases on e-invoicing and others, but maybe how do the banks start coming on board, right? Or how do the lenders start coming on board to use this data point? So because rest all is the end state, right? But the middle state is that they don't know, and maybe their CRM system, whatever, or LOS system don't handle. So maybe some thoughts on how banks can actually quickly come on board, maybe either OKEN Sahay or generically GST framework.
So I think this entire process is now much more simplified. So a bank has to kind of take the kind of initiative, and they have to come out of their traditional mindset that we want to empower this particular data and this kind of platforms to make credit decisions. They will have to kind of take risks. And as kind of Rishi mentioned, there are already about 6 or 8 kind of providers onto the platform. Many more will follow. And we are also working with multiple different banks who have already kind of embraced this particular data as a kind of main point of their credit decisioning. So there are two parts of it. One, I have a large customer for whom I am already serving as a bank, and I want to use the GST data for further kind of analysis of his business creditworthiness. So that is one part of it. Even for that, the ready-made solutions and data points are already available, and that can be used by the banks for the decision making. The second part comes in is kind of we go for mass volume, which are the simplest and the simple of the transactions, which can be kind of managed. What actually needs is bank needs to kind of analyze a particular vendor maybe once a year, maybe once a 6 month in detail, or maybe once in 3 months on the type of risk that they want to take. And they can kind of fix up the credit limit of that particular kind of client. And based on that, they can easily kind of use the technology tools which are available and which are now in place for more than 4 to 5 years. So they can easily make use of those technological solutions and kind of completely automate the process, and they will be able to actually see the type of response that they are getting out of it. And our analysis has been that the credit worthiness into this particular area is far better. A small retail outlet or a mid-sized retail outlet who is actually taking money from a bank to kind of take what you called is fill up his godowns into the month of March or at the time of Diwali when the discounts are the highest, is never going to default on his loans. He is only going to pay up them faster and quicker because his mentality is the sooner I pay up, I'll be ready for the next cycle. And this is a great benefit to those small users. The process is simple. The complete LOS part of this loan origination is completely ready with multiple different providers, including Signet to an extent. The underwriting models are ready for deployment to an extent. You just need the multiple data points which you want to actually analyze. You need to tweak the model as per the bank's risk policy, and you start using it and start integrating with your core systems. So it's kind of maybe between a 1 month to a 3 month cycle, you can actually enable your bank or a NBFC to make big with this kind of solutions. So it is as simple as that.
Fantastic, fantastic. So
Can I add to this? So as we go through this, what you've pointed out is quite right. See, there are some very, very savvy lenders who know how to ingest these or know how to adapt very quickly to new forms of data and learn to model, learn to ingest, model, and actually get insights and start. I think the majority struggle with this, right? Because to do a completely digital flow, to be completely automated, I know AI and ML are thrown around as, like keywords and things very often. But like, unless you're using streaming data, tweaking your model in real time, you're not really even close to machine learning, right? If you're tweaking your model every 2 months, that is tweaking your model every 2 months. Like, machine learning is when it's happening in real time with streaming data, where, like, to be honest, it's not even possible because we don't have live streaming data today. We're only beginning to enable it. So it's actually very difficult. And then the second thing is as we work with some of the larger lenders, we are trying to undo 30 to 40 years of collateralized led thinking on MSME lending, right? If you ask any MSME lender, first thing they'll say, collateral kya hai, turnover kya hai, and if the turnover is not over a certain amount, and if the collateral is not, providing enough coverage, then I don't want to lend. What we are trying to push now is that you lend basis the information, and that you do smaller tickets where previously you thought it was not possible to do profitably, but now it is. And even if all the ecosystem pieces are in place, sometimes changing the mindset to be able to take that step. And you would think that taking the step into completely automated small ticket loans would be very easy. It is harder than giving the large loan and to do it manually, right? So sometimes it takes months to convince people, then slowly, you give a few loans, then they see it coming back. Then see, one of the major questions that people ask, like, let's, like, throw it out there, like, there are ecosystem costs which are geared to larger ticket loans. For example, like, whether it's what you pay for money transfers, what you might pay the credit bureau, what you pay for an escrow service, everything is geared to larger ticket loans. But nothing is geared to small ticket loans, right? And which is why that exclusion has happened. So we are dealing with multiple challenges. One is getting people tech savvy. Now that is an easy solve because there are lots of technology partners that you could partner with, like lots of modeling firms you could go to help you do this. But the mindset shift is the hard one, right? Like, so that just requires constant engagement. And then finally, and when they try it and do a little bit of a use case and see money coming back, then everyone is happy and then they dive in, right? So it's really, not so much the capability, because the capability can be outsourced and bought and you can get there. But then even the willingness to do it is a very, very big one.
This is good. This is good. Neeraj, one question from my side is that we right now hear about GST, and then there is e-invoicing, and then e-way bill. All of them are now hanging in the mind of a banker, right? Saying, what can I do with all of them together? And then we are talking about how all of this can help you invoice discounting and trade financing. All of that e-invoicing specifically can be of great help. So maybe you can put this structure in mind of people, and then also talk about how invoice discounting and trade finance kind of framework can be used in using this data.
So I would go to the first point, that when you are running your business, you raise an invoice. Now in India today, 20 crore and above, anybody having a turnover of 20 crore and above needs to register this invoice on an e-invoicing portal. Today there is one invoicing portal, and in a few months time period, there are going to be 4 more invoicing portals. So you need to register this invoice onto the invoicing portal. A government would kind of give you a digital certificate or a kind of a digital footprint, which will confirm that this particular invoice has been registered onto the invoice portal. This e-invoice automatically will be pushed to the GSTN portal as a part of your GSTR1, which is the kind of summary of all the information that you need to pay your tax onto it. This is an automated process. Next, when you actually are shipping goods, if it's not a services invoice and you are shipping the goods, you need to generate an e-way bill. The e-way bill also can be generated at the same time you are generating the invoice, and you do not need to do both the processes separately. But when you are e-way bill is a road permit, and when you see a road permit being kind of transacted, and if you are seeing the movement onto the road permit, then you can be assured that this particular goods have been actually shipped. Now, these are the two pieces which gives a banker or which gives a fintech company assurance that this is a genuine transaction. We can verify it onto the government portal. It has been kind of used to pay the taxes onto it. At the same time, the road permit has been generated. We can track the movement of the goods along with it. This gives the complete genuinity of a transaction. The only challenge which comes into it for a banker today is whether the same kind of a taxpayer is going to the multiple banks to get the same invoice or not. That is a challenge which actually needs solution, and maybe in few months time period or in some time period, that also solution will come onto play, by which that genuinity will be open for a confirmation for the banker. So this is something which we all are working on to it, and we'll see results around it as well. Now, these are the transactions which are important, and instead of going into the kind of granularity of what needs to be done, because everybody who's running a business is generating an invoice, is registering it onto the invoice portal, he's generating a road permit, and he's paying his taxes. Now, this is as simple as having my lunch and dinner, and this is a kind of a very normal thing that a business does. Now, only question is, how do I get the access of this particular data? And currently through the GSP mechanism, and in few weeks time period, as Rishi mentioned, through the account aggregator mechanism, this particular data will be accessible to a financier or to a fintech company to kind of assess the creditworthiness of it. This is something very simple which is going to come into play, and using that you can kind of verify the information, and you can finance that transaction. And as Rishi rightly mentioned, that if you do not digitize this entire process, and if you try to do it manually, the cost involved into it is so high that it will be impossible in terms of kind of financing the small ticket loans. And the biggest market or the biggest boom in terms of this is going to come in the small ticket loans. Now, when we kind of go to the new IRP ecosystems, what we are kind of talking about is it will be very simple. As a kind of a taxpayer or a dealer or a distributor or a small business owner, I'm generating an invoice. I want to get it financed. A button would be available, maybe a GST Sahay app or something. A button would be available at the same place. Finance now, and I would be able to get the finance of that particular invoice into my bank account through the UPI mechanism. It is going to be as simple as that, and that he will be able to use it. And maybe once he receives the money for it, that gets automatically debited also from his bank account. Now, this is a mindset and a mechanism which we need to go for it. And if this happens, the kind of credit growth that will happen into India will be exponential. And we had done a kind of a small survey of retail outlets, asking them if this is the methodology which you get money. They said the kind of exponential credit offtake will go up by 20 to 50 times. That is a kind of interest into this particular mechanism. This will help them to not to go to the kind of loan sharks and kind of get the credit at a reasonable rate, and maybe increase their profitability in terms which will help their business. So that is a kind of mechanism which we need to go about it. And my pointer to all the banks, all the financial institutions, and everybody into fintech space is give it a try. Don't say it's not going to work, it's too complicated, or it's going to be a challenge. Give it a try, because this is going to help into the nation building very, very clearly.
Thank you. Thank you. Thank you.
And if I just had to add to what Neeraj was saying, giving it a try is one thing, but like the thing is, if you don't do this, right, like maybe 3 to 5 years from now, where your competitors have adopted this and are able to give loans at a seriously lower operational cost than you are able to, then how are you going to compete? And there's a learning curve trying to, as you learn to use this new technology. So the time to get started is now. So it's not only building the APIs and the backend tech, it's also getting used to the data and the credit models. And it's best to do it early on. So there's a compounding effect of the learnings later. Otherwise, you'll just be playing catch up 4 or 5 years out from now.
No, so I was telling something to a guy, a very senior guy, saying, what will happen if this happens? I was like, I'll change the job. I'll go to the bank which has it, right? So funny it is. Funny it is. Okay. So maybe one of the questions coming is that what kind of frauds can happen on this kind of framework, and how we can prevent it, right? Because any kind of digital initiative which happens, Rishi, there's always a probability of those guys who will come in and sort of pump it up and raise numbers, right? So how do we ensure that we can control this in this framework?
See, I would just say the punchline here is if you aim small, you miss small, right? So if you're giving these small ticket loans, and I understand we are doing everything digital, you've not met the customer, everything is remote. See, like say in a GST Sahay or even a GEM Sahay type setting, right? The person has registered on the GEM platform. They are doing Aadhaar KYC. They're providing the Udyam certificate. They're then Aadhaar e-signing the loan agreement. Their credit data is being matched to the data provided from the registration model. In this case, it's GEM. Otherwise, it'll be GST data where you're matching that. So unless there's a fraudster who can create multiple synthetic IDs across multiple, ID issuers and that sort of thing, I mean, in my opinion, it might be quite hard. Now, yes, people will argue that fraud always happens, and yes, it does, because people figure out, ways to game the system. I would think the incidence would be less, because it's harder to manipulate so many things to be able to get this done. But do we have an answer on what those instances will be, given that this is all technology so new? I don't know. But we'll obviously keep a watch and learn as this grows. And then obviously, if there are places where there are frauds, then we'll try to plug them. But I do think it'll be like a safer way to do things than has been done so far. Like, so just to give you a simple example, previously you would take copies, self-attest your documents, and then hand them to a DSA's agent. And are you safer from an ID perspective, giving your documents to that DSA who can then copy it or use it 50 different times, or maybe even collude with a lender and take a loan in your name? You're probably not. So like I honestly trust the digital route more, and obviously that's what I'm doing. So that's what people will say. Obviously you would, but I think that like even evidence points towards that it'll be safer. But yes, there will be incidences that people will figure out how to game it, and we'll have to plug it at that stage. But I don't know of any specific instances that it'll be a major problem. Now, if someone gets a hold of your phone and is able to use your OTPs, then it's like someone having the key to the lock of your house. So saying that my house is breachable, then yes, is possible. But that notwithstanding, I think it'll be relatively safer and more secure for all involved.
I think it's good. That's good.
Samir, I would, like,
yeah.
a couple of points I would just like to add on to what it said. So it is very safe to do this. I'll put it across in a different way. It is very safe because the richness of the data and the history of the data allows you to make such a prudent decisions that the risk involved into the kind of entire transaction would be easy. And I say, if I am a kind of a banker, I want to start small into it. I will say I will only use it for the channel financing. So maybe not from the corporate to the distributor, but from the distributor to the retail level. I will select that he is buying material from a distributor of a large FMCG, maybe Unilever, maybe Pidilite, or maybe kind of Ultratech kind of a thing. Is a distributor to a retail outlet of their material. I will say he is buying a particular product of Pidilite, maybe a Favicol, for last 5 years. That particular kind of a thing I can verify onto it. When I can build this kind of data points into my system and decide these are the people I want to finance to, you cannot miss it. They would not default unless and until it is a kind of a very different scenario at their place, because they are so wedded to their business, their household runs onto their business, that defaulting on such type of loans is very, very rare into it. And I have seen this business, this ecosystem from very close quarters, because we have a family business of kind of a distribution and dealership for last 50 years plus. And I have seen this business very closely, and there are hardly any defaults into this particular business transaction. So that is why I am very confident that if the right kind of models are being built around it, the right kind of prudence is being put into the decision making process, you cannot fail in. And the defaults, if at all it happens, it will happen at a very minor percentage point of to the total things. So this is something which one should really give it try. But very clearly it's a question of mindset, whether from an asset based lending are you willing to experiment and move towards a digital lending and a kind of a no collateral lending. That's a kind of change of mindset which is required, and I think that change of mindset will come. The people who start today will definitely be a much early adopters. They are already late by 2 to 3 years into this entire process, but if they start even today, they will still be early adopters, and they will have a much deeper way of going into it. So that's the kind of point I just wanted to talk about frauds.
Thank you, Neeraj. Thank you. And I think questions are streaming at a very fast pace. Maybe some of these questions I would have picked up already. All those who are there, please give your feedback as well. All those who will give the feedback, we'll share with you an ebook on GST as well, so which we have created. I think Signet has created a lot of such good books, so we'll share you those ebooks as well. So please go ahead and share your feedback. Now coming back to some of the questions coming in, instead of me asking these questions, I think since it's interactive, so we don't have a very immensely large group. It's good, sorry, 70, 80 people here. So Vishal, you can go ahead and ask your question, please. Vishal, you have a question on authorization now. I mean, you were talking about the risk and all. So Vishal, you want to open your video and ask your questions and introduce yourself, if that will be great. Otherwise, I'll end up asking you a question. Yeah, Vishal, put your video on and then ask your question, please. Vishal, you must be speaking on mute. Okay, we're still struggling with him coming on board. So the question which is coming from Vishal is, how do you take care of authorization of such loans, which we were talking about? Is there a mechanism to legally bind the borrowers? Yeah, and yeah, I think he's also looking at e-signature and other stuff, right? So that's largely the question he was asking, that how do you sort of hold that? So I mean, my take is that this is only for validation. So basically, this question is maybe more to Sahay framework, that how would you sort of hold the customer for this?
No. So look, so for the GST piece, right? Anyway, you have to enter your GSTN number and you get an OTP that has been with the registered number. So unless you are the person who is using it, you can't register anyway, number one. Secondly, if you're sharing bank statement data via the account aggregator, you have to authenticate via the source bank before the data is shared in any case. And that's the protocol that account aggregator follows. So that's the second line. Now, even after both are done and your credit bureau data is pulled and you're given an offer, then you have to do your Aadhaar, when you're being given the loan, you have to do the Aadhaar KYC, maybe even the Udyam. Then your whichever account that you shared is penny dropped and verified that the name and all matches. And then finally, when you sign the agreement, it might be just a simple OTP if that's what the lender wants, or it's Aadhaar e-sign. If it's Aadhaar e-sign, it's to again get an OTP to the number that you've linked to your Aadhaar number. So there's so many points like of authentication that, I mean, and also matching. That, I mean, I'd be surprised like if someone has being able to pull off a synthetic ID and that like person doesn't exist and they.
So Samir, just to add to what Rishi has been saying, there is a possibility that we can also do the digital signing of the entire process. And
Correct.
even kind of through a signature kind of a portal, we can do the digital signing. We can do a e-stamp paper kind of possibilities also there. So that entire process digitally is possible, wherein you do not have to go to the person's place in person to get any signatures. So that is possible to achieve.
Sure. I think we may have lost Rishi. No, there he is. Just one second.
Sorry about that. I just dropped off for a second.
Yeah. So I think this another question which is coming from Shrijit Nair. He's saying, what is the role do you see TSPs and which is LOS and LMS players provide here? What is the role which they can provide do here, which including core banking guys?
So it's a simple two-line answer. You can help bring manual lenders into the digital age by getting them on both OKEN and account aggregator. So, one side is a lending side where the lenders need help. And we all know there's this massive tech crunch, tech resource crunch today going on anyway. And then there's also the ability to build this stuff. So there's one very clear, lenders need the help to be able to get onto these. And on the other side, eventually, post July, August, there'll be an opportunity to build use cases for LSPs, like build white label products for the lending flows on the user platforms. So there's a very, very large role to play for TSPs, to be honest, because not all the players are going to want to build these utilities themselves.
Sure. Any thoughts from your side, Neeraj? You also have a platform on LOS LMS side. So
yeah, so I think as a TSP, we are already getting lots of benefits in terms of people wanting to use the standardized products to be in place. So I think it's an absolute market for the TSPs to kind of grow onto it. And again, it's a kind of integration with the core banking is very, very critical into the entire process. So whatever capabilities you have as a TSP is going to be highly beneficial into that, and understanding how a bank is working, that will be an added benefit. So kind of the model over here is more of a buy versus build. And that is the process which people are going to go into it. So whatever readiness you have as a TSP, that is definitely going to benefit into the long run.
So I'll give you one anecdotal piece of experience that I had with this, right? So it was a startup TSP who reached out and said, look, we want to build this product for OKEN account aggregator. Can you guide us on what we need to build? No client, right? They didn't have a lender on. There were like a few guys who had just gotten together, created a company and said they wanted to do something in the space. They went ahead and built a solution based on, what are experiences that you need to do to bring lenders on board. And as luck would have it, as I was talking to a lender, they were looking for someone to do this for them. And I said, are you okay with a startup? Put them in touch. They had their first client, right? So, I know it's like, even I was surprised, like these guys had the gumption to just go ahead and build something saying we'll find a client once we've built something. But that is what is required to do, see, because we are also looking to use TSPs as leverage to get people to adopt, right? So we will actually help arm the TSPs with all the material, with the know-how. I don't even have to be in the picture because, my goal is adoption. I know the TSP's goal is monetization, and we are happy to do everything we can do to help them monetize. But the idea is then they have to obviously build and then go and help get people on board as well. And we'll obviously, help with that as well. But there's a massive role for TSPs to play going forward. Not all of these market players are savvy enough to do this themselves.
No, fair. I think the challenge I see is that, and this is something I blocked today, is that LOS, LMS players expect the lenders to tell them what to do. I think that time is over. They have to figure out what they want and bring the knowledge and the whole sort of architecture on board, right? Otherwise, मेरे को ये कराना है, मेरे को requirement दे दो, मैं बनाऊंगा, एक analyst भेजूंगा. I think we're done.
No, in fact, you're exactly right. What they should be going and telling the lenders is, let me take you into the digital age. Not the lender saying, here's the requirement for me to get into the digital age. No, the TSP should go and say, let me show you how. Like I can take you and make you give a loan in 10 minutes without needing a branch.
बहुत simple है, जो दिखता है वो बिकता है. And very, very simply, if you have the product ready, if you have the solution ready, then only you will be able to sell. I'll give my own personal example that we were bidding for a government work, and it was a massive product and a massive solution. We were not even sure that we will get it 1%. We did build the entire product and then went for the demo. So that is a kind of investment, or that is a kind of a heart you need to have in terms of as a TSP. And if you do that, there is no reason why you will not succeed.
This is good. But don't look at it, bring it to your heart. All the luck stories don't always work, right? So he's got it. It's not doesn't happen. So a lot of times we prep every time. So we have a client we have been pitching for 5 years. 5 years we have been pitching. You've not been able to close. So it goes other way around as well with all the preparation. But this is good. So I think we are towards the end. Please request everybody, if you have more questions, you can share it with us as well. We will try to take it offline. And also give us the feedback. But before we close, maybe last one pointer from each one of you, Rishi and Neeraj, before we close, any pointers you want to give to entrepreneurs who are building or thinking something around this area?
Neeraj, go ahead. Yeah, I'll go after you.
I would just say one thing is interact, communicate, and we have 3 simple principles at Signet. Everything that is standalone, make it connected and smart. So that is a approach we take. So whatever solutions you have, make them connected, make them smart. And if you are in doubt, reach out, talk to people. You will get all the answers from the industry that you need to have. But go for the solution. And to all the lenders, I would say, this is one area that you need to really start fast. Don't miss the bus. And this is worth exploring and worth going after it. So that's all I will say. And anybody needs any help or support from me, more than happy to help into that area.
Okay, from my end, look, we tend to want to go and build things where the volumes are already large, but there's a massive unaddressed opportunity. I actually envy the entrepreneurs who are now going to embark on doing the supply chain finance and building these digital journeys, because there's a massive opportunity. And I think the timing, it can't be better than now. There's another year or year and a half, 2-year window where you can build out these products and really like get going. We are obviously there both as iSpirit and as Credol to try to help any entrepreneurs. We know, as you all know, we are very pro Indian entrepreneurs, so happy to help, and feel free to reach out if you need us to, to help in any way to get you going. But I would just say start building, start doing. All the pieces in the infra now is out there. It's just a question of you, like, picking up your tools and getting on with it. There's a massive opportunity to be captured in the next 3 to 5 years.
Super, super. Thank you, Rishi, and thank you, Neeraj. I think honestly, my knowledge on this area is not very high, and what I did actually was prep in the morning. I came, I started reading upon, went into my GST framework, and I'm sort of still trying to grapple with it. And while we are building solutions for our clients, we also realize that it's just pick up the document, read upon it, put a structure. It always works. So I think you get a lot of clues here, and I'm sure while a lot of people actually continue, so we did not promote this event too much, but what I see today is that a lot of people joined and they continued. So thank you to everyone who has joined. And I hope this session would have been of some use for you. If there is any question around GST and AV framework, reach out to us, or you can send the mail to me or to Shrikant or to Rushi and Neeraj as well. Please go ahead and ask your question. We'll try to figure out how we can support. Thank you, guys. Thank you.
Thank you so much. Thanks.
Thank you. Thank you, everyone.
Thank you.
Bye-bye.